Hi, this is Dan Stewart for your NORAM Asset Management Market Update, Tuesday, November 7th, 2010. The Bush tax cuts were extended and passed by Congress today. The markets liked it, all up until the last hour of trading. The markets rolled over and the S&P and the Dow ended up essentially flat, and the NASDAQ was up marginally. Oil went over $90 a barrel intraday today, but closed around 88 and a quarter. Gold was down $16 an ounce to $13.99, and silver was down 90 cents or 3% to $28.81, below $29 an ounce. The US dollar was up against the euro and the yen, but down against the pound, and treasuries across all maturities were up. Therefore, yields were up and prices were down. Over in Europe, the markets were up on hopes that the Irish bailout or cuts would boost the European markets and they would be out of trouble. Although Irish ATMs had an electronic glitch across the country and you couldn't get your money out. Could that be foreshadowing of a run on the banks and a defensive move by the banks? Just a thought. Asia was mostly higher, and once again it all goes back to the Bush tax cuts. Our deficits will be bigger, but Congress will be putting more money directly in the hands of taxpayers and consumers. This will increase inflation fears. Treasuries came under pressure today, but as the tax rates for dividends and capital gains stay the same and don't go up significantly, this should be good for stocks. So in the short and midterm, your stocks will still be okay. But in the longer term, you're going to need to have commodities, especially the food or soft commodities, and gold and silver. You need to be very wary of bonds. This has been Dan Stewart for your NORAM Asset Management Market Update, Tuesday, November 7th, 2010.